the forgotten piece of the puzzle. When people talk about crypto, the spotlight always falls on the usual suspects. Bitcoin, the digital gold. Ethereum, the smart contract giant. XRP, the controversial bridge for banks. Even Stellar, the humanitarian twin, gets its share of attention. But hidden in the shadows, another network has been quietly preparing to solve one of the most important and least understood problems in the global economy. That network is XDC. The world runs on trade. Every ship crossing the ocean, every container stacked in ports, every invoice and customs declaration. Together they form the circulatory system of global commerce. It's a system worth more than $20 trillion annually. And yet behind this enormous machine lies a problem almost no one talks about: the inefficiency of trade finance. Global trade is still shackled to paper. Bills of lading, letters of credit, invoices and customs forms. All moving slowly, vulnerable to fraud, error, and delay. These inefficiencies don't just waste time, they trap trillions of dollars in liquidity, creating a financing gap that especially punishes small and medium businesses. Banks often won't lend against paper-based trade documents, leaving companies stranded without the capital they need to grow. This is the problem XDC was built to solve. XinFin, short for Exchange Infinite, emerged with a clear mission: to bring trade finance into the digital age. It wasn't designed to be flashy. It wasn't marketed as the next Bitcoin or the next Ethereum. Instead, it was engineered as a hybrid blockchain, combining the transparency of public networks with the privacy and compliance features enterprises demand. The goal was simple but enormous: tokenize trade assets, digitize paper, and unlock the trillions stuck in outdated systems. From the start, XDC's design made it different. Transactions are fast, costs are near zero, and the network is energy efficient. But more importantly, it was built for institutions, banks, logistics companies, customs authorities, and international organizations that require trust, security, and regulatory alignment. XDC wasn't chasing hype cycles. It was building the pipes of a future where global trade could flow digitally, seamlessly, and without the friction of paper. And yet, despite its potential, XDC has remained one of the most underrated assets in the crypto world. While XRP fought a high-profile battle with regulators, and Stellar made headlines through humanitarian projects, XDC worked quietly behind the scenes, forging partnerships with organizations like the International Trade and Forfeiting Association, ITFA, and the TradeFinex Distribution Initiative, TFD. These are not household names, but in the world of trade, they are powerful players. And their alignment with XDC suggests that the network is not just theory, but practice. In many ways, XDC is the forgotten piece of the puzzle. XRP may settle wholesale payments. Stellar may connect individuals. But without trade finance, the global economy doesn't move. Every product, every shipment, every supply chain relies on a system that desperately needs modernization. And that modernization may well be powered by XDC. This is not the story of hype. It is not the story of retail speculation. It is the story of infrastructure, the hidden machinery that keeps the world turning. As tokenization spreads and blockchain adoption accelerates, the question will not be whether XDC deserves attention, but whether the world can afford to ignore it any longer. Welcome to XDC, the hidden engine of global trade. Part 1. The birth of XDC. The story of XDC begins far from the hype-driven frenzy that has defined much of crypto's history. While Bitcoin emerged as a rebellion against central banks, and Ethereum as a playground for developers, XDC was born with a different mission: to fix the machinery of global trade. The project's roots trace back to XinFin, short for Exchange Infinite, founded by a group of entrepreneurs and technologists. XinFin recognized something few in crypto were paying attention to: the inefficiencies strangling international trade. They weren't chasing speculative markets or meme coin mania. They were studying the workflows of supply chains, the paperwork clogging up global commerce, and the billions in financing gaps that prevented businesses from growing. What they saw was staggering. Trade finance, the process of funding shipments and ensuring goods move safely across borders, was still dominated by paper. Letters of credit, bills of lading, insurance certificates, fragile documents shuttled between banks, shipping firms, customs offices, and insurers. Each one took days, sometimes weeks, to process. Each one introduced delays, costs, and risks of fraud. The vision for XinFin was clear: digitize these processes on blockchain. Create a system where trade documents could be tokenized, verified instantly, and shared across a secure, transparent ledger. If successful, it could unlock trillions in trapped liquidity and empower businesses, especially small and medium enterprises that too often found themselves shut out of global markets. But to achieve this, XinFin knew it couldn't simply copy existing blockchains. Bitcoin was too slow and energy-intensive. Ethereum was powerful but costly and prone to congestion. For trade finance, where transactions must be cheap, scalable, and compliant with regulations, a different architecture was required. So they built the XDC Network, a hybrid blockchain that combined the best of both worlds. It offered the transparency and decentralization of a public blockchain, while integrating the privacy and security features enterprises needed. Banks could use it without exposing sensitive data. Governments could adopt it without losing oversight. Companies could trust it to comply with international standards. From its earliest days, XDC's design choices revealed its purpose. Transaction costs were measured in fractions of a cent. Finality was nearly instant. The network consumed a tiny fraction of the energy used by proof-of-work blockchains, making it environmentally sustainable. And crucially, XDC was built to be ISO 2022 compliant, aligning with the global messaging standard banks and payment systems were adopting. Unlike Bitcoin or Ethereum, which gained traction by cultivating massive communities of retail investors and developers, XDC focused on a smaller, more targeted audience: financial institutions, trade organizations, and enterprises. The team knew that in the world of trade, credibility mattered more than hype. That's why XinFin pursued memberships and partnerships with organizations like the International Chamber of Commerce, ICC, and the ITFA, International Trade and Forfeiting Association. By aligning with institutions already embedded in global trade, XDC positioned itself as a serious contender. Not just another crypto experiment, but this strategy came with a cost. Without the loud marketing campaigns and speculative mania of other projects, XDC was often overlooked by the broader crypto community. To many retail investors, it was an unknown coin, overshadowed by more glamorous names. Yet beneath the surface, the groundwork was being laid for adoption that could one day rival or surpass its louder competitors. The birth of XDC was not about instant recognition. It was about patience, persistence, and precision. It was about designing a blockchain for a very specific problem, and solving it so effectively that institutions could no longer ignore it. As the network grew, one truth became clear: XDC wasn't built to compete for attention in the wild west of crypto speculation. It was built to run quietly, efficiently, and indispensably in the background, the plumbing of a new digital economy. And in the world of global trade, that plumbing could become the hidden engine that keeps everything moving. Part 2. Trade finance, the trillion-dollar problem. Every year, trillions of dollars in goods move across the world. Tankers full of oil crossing oceans, cargo planes loaded with electronics, containers stacked sky-high at ports from Shanghai to Rotterdam. This movement of goods is the backbone of global commerce, and behind it all lies the system of trade finance. Trade finance exists to ensure that shipments are paid for, insured, and delivered. A manufacturer in India may sell textiles to a retailer in Europe. The retailer wants proof the goods will arrive. The manufacturer wants payment assurance. Banks, insurers, and customs authorities step in, issuing letters of credit, bills of lading, and insurance certificates to guarantee the deal. On paper, it's a system built to create trust. In practice, it has become one of the most inefficient bottlenecks in the global economy. The problem is that trade finance is still dominated by paper documents. A single shipment can require dozens of physical forms, letters, invoices, customs declarations, shuttled between multiple intermediaries. These documents often take days or weeks to process. They get lost. They get forged. They get delayed at ports or border crossings. Every hour of delay costs money, and every form of paperwork locks up liquidity. The scale of this inefficiency is staggering. The World Trade Organization estimates that the trade finance gap, the difference between what businesses need to fund their exports and what banks actually provide, is more than $1.5 trillion. Small and medium enterprises, SMEs, are hit hardest. Lacking collateral and unable to convince banks to take risks on paper-based documents, they are often shut out of global trade entirely. It's not just about inconvenience. It's about opportunity lost. Trillions of dollars in potential trade and growth never happen because the system is too slow, too opaque, and too outdated. This is the problem that XDC is designed to solve. By tokenizing trade documents, turning letters of credit, invoices, and bills of lading into digital assets on blockchain, XDC makes them instantly verifiable, traceable, and secure. Instead of waiting days for a bank to process a paper form, verification can happen in seconds on-chain. Instead of liquidity being trapped in stacks of paper, those tokenized documents can be financed, traded, or used as collateral immediately. The impact of this shift is enormous. A small business in Asia could tokenize its receivables and access financing from global investors, not just local banks. An exporter in Africa could prove shipment authenticity instantly, securing payment faster. A shipping company could reduce fraud and delays by using blockchain-verified bills of lading. And this isn't just theory. XDC has aligned with global initiatives like the TradeFinex Distribution Initiative, TFDI, and the International Trade and Forfeiting Association, ITFA, organizations representing major banks, insurers, and trade financiers. Through these partnerships, XDC isn't trying to replace the existing system. It's trying to modernize it. To take the paper-based world of trade finance and drag it into the digital age. The beauty of XDC's solution lies in its efficiency. Transactions cost fractions of a cent. Settlements are nearly instant. And because XDC is ISO 2022 compliant, its tokenized trade documents can communicate with the very same messaging systems banks are already migrating to. It doesn't fight the system, it integrates with it. For decades, global trade finance has been described as a problem in need of disruption. XDC may be that disruption. Not a flashy meme coin, not a speculative bubble, but a targeted solution to a trillion-dollar inefficiency that quietly impacts every corner of the global economy. The world doesn't run without trade. And trade may not run much longer without modernization. In the battle to digitize this hidden backbone of commerce, XDC could be the chain that finally unlocks the future. Part 3. ISO 2022 and Institutional Alignment. When you talk about the future of global finance, one phrase keeps coming up: ISO 2022. It's the new universal messaging standard that banks, payment systems, and clearinghouses are adopting worldwide. By 2025, nearly every major financial institution will have migrated to it. ISO 2022 allows richer, more detailed data to travel with every payment, improving speed, compliance, and transparency. In other words, it's the new language of money. For cryptocurrencies, alignment with ISO 2022 is more than a technical feature. It is a passport into the financial system of the future. And this is where XDC has positioned itself brilliantly. From the ground up, the XDC network was designed to be ISO 2022 compliant. This means that tokenized trade documents, cross-border transactions, and payments moving across XDC AS rails can integrate seamlessly with the same messaging standard banks are already using. Instead of trying to disrupt the system from the outside, XDC chose to build within it, ensuring that institutions don't need to overhaul their workflows to adopt blockchain. This alignment gives XDC an advantage that many blockchains lack: institutional credibility. For banks, regulators, and enterprises, ISO compliance isn't optional. It's mandatory. By meeting these standards, XDC can step directly into conversations with the financial establishment and be taken seriously as infrastructure, not speculation. But ISO 2022 is just part of the story. What makes XDC unique is how it fits into the broader ecosystem of ISO-compliant assets. XRP is positioned as the settlement layer for wholesale payments, the bridge currency that moves value between banks and nations. Stellar, XLM, focuses on retail payments and inclusion, serving individuals and NGOs. XDC fills the missing piece: trade finance. Together, these three tokens form a complementary triad: XRP for settlement, Stellar for retail, XDC for trade. Each has its niche, each plays its role, and each aligns with the same global standards. This isn't about competition. It's about interoperability. Part 4. Tokenization and real-world adoption. The promise of blockchain has always been tokenization. the ability to take real-world assets and represent them digitally on a secure global ledger. For many blockchains, tokenization has remained mostly theoretical, but for XDC, it's already happening in one of the most critical industries on Earth, trade finance. Trade finance has long struggled with liquidity gaps. Banks are reluctant to fund small and medium businesses because paper-based documents are hard to verify and easy to forge. As a result, trillions of dollars in trade never materialize. The idea behind XDC is simple but revolutionary. Turn those documents into tokens. A tokenized invoice or letter of credit isn't just a piece of paper. It's a digital asset with built-in verification, traceability, and compliance. Once tokenized, it can be financed, traded, or used as collateral instantly. What was once an illiquid piece of paper becomes a liquid asset that global investors can access. For small exporters, this could mean the difference between growing their business or being shut out of markets. To make this vision real, XDC has aligned with some of the most influential organizations in global trade. The TradeFinex Distribution Initiative, TFDI, brings together major banks, insurers, and asset managers to create a marketplace for distributing trade finance assets. By working with TFDI, XDC enables these institutions to tokenize and trade invoices and receivables on blockchain, creating liquidity where none existed before. Similarly, the International Trade and Forfeiting Association, ITFA, a global trade finance body, has embraced XDC as part of its push toward digitization. Through the ITFA's Digital Negotiable Instruments (DNI) initiative, XDC has been integrated into pilot programs to test blockchain-based negotiable instruments. These pilots aren't just experiments. They're steps toward rewriting the rules of international trade documentation. The XDC Network also powers TradeFinex, a platform designed specifically for tokenizing trade finance assets. On TradeFinex, invoices, purchase orders, and receivables can be turned into digital tokens and distributed to a network of investors. This creates an entirely new asset class, trade-backed tokens, that could attract billions in global investment. For institutions looking for safe, yield-generating assets, tokenized trade finance may be irresistible. What sets XDC apart is that this adoption is not hypothetical. Real-world pilots are already underway. Banks and fintechs are testing tokenized documents on the XDC network. Regulators are studying how these tools can reduce fraud and increase transparency. And companies around the world are beginning to see blockchain not as a buzzword, but as the infrastructure for the next phase of global trade. The implications extend far beyond trade finance. Once invoices and letters of credit are tokenized, the same model can apply to bonds, securities, commodities, and even carbon credits. XDC's architecture makes it possible to bring almost any real-world asset on-chain, creating a bridge between traditional finance and the digital economy. This is where XDC's hybrid design shines. Public enough for transparency, private enough for enterprise needs, and efficient enough to scale globally. The network offers exactly what trade institutions have been waiting for. It doesn't demand they abandon their systems. It offers a way to upgrade them. As adoption accelerates, the role of XDC becomes clearer. It's not competing for attention in retail speculation. It's embedding itself into the infrastructure of commerce. And as more assets are tokenized, the liquidity unlocked could transform global markets, making trade finance not just a back-office function, but a new frontier of investment. The blockchain revolution is often framed around currency, but XDC reminds us that the real revolution may be in assets. By turning the paperwork of global trade into digital tokens, it may unlock an entirely new era of efficiency, liquidity, and growth. And this is only the beginning, because if tokenization takes hold at scale, XDC won't just be supporting trade finance, it could become the hidden engine of a fully tokenized global economy. Part 5. The future of XDC. The world is changing. Every sector of finance, payments, investments, banking, and commerce, is being pulled into the digital age. Tokenization is no longer theory. It is becoming the backbone of a system where assets move globally, instantly, and around the clock. In this world, every blockchain that survives will serve a role. Some will dominate headlines, others will dominate infrastructure, and that is where XDC may shine brightest. XDC is not built to be the loudest chain. It doesn't need to capture retail hype like Bitcoin or Ethereum. It doesn't thrive on meme culture or media cycles. Its strength is quiet, steady, and essential. It lives in the background in the rails that global trade runs on. And if global commerce is the lifeblood of the economy, XDC is positioning itself to become the circulatory system. Imagine a future where every invoice, every letter of credit, every bill of lading exists not on paper but on blockchain. A world where exporters in small villages can tokenize their receivables and access global capital. Where banks can instantly verify trade documents with zero chance of fraud. Where insurers, shipping companies, and customs offices all operate on the same digital rails, moving value as seamlessly as information travels across the internet today. This isn't fantasy. It's the natural progression of the pilots and partnerships already in motion. The work with the TradeFinex Distribution Initiative, TFDI, the ITFA, and platforms like TradeFinex shows that the architecture is already being laid. XDC is not waiting for adoption. It is building it. The opportunity is enormous. The trade finance gap, trillions in unmet demand for capital, could be closed through tokenization. The $20 trillion global trade market could be streamlined, digitized, and opened to a new class of investors. And XDC could be the network quietly powering it all. This is the future of XDC, not as a speculative asset, but as infrastructure. The hidden engine of trade. The chain that doesn't just move money, but makes commerce itself liquid. For most people, it will remain invisible, just as SWIFT is invisible today. But its impact could be felt in every corner of the economy, from the price of goods to the availability of credit, to the speed of global shipments. In the grand design of the new financial system, XDC sits alongside XRP and Stellar, each filling a role the others cannot. XRP moves wholesale payments for banks. Stellar brings retail access to billions. XDC powers trade, the machinery that makes the global economy turn. Together they form a triad of rails. Money, people, and commerce united under ISO 2022 and tokenization. The irony is that XDC may never enjoy the spotlight its siblings have. It may never dominate headlines or capture the same speculative mania. But in the long run, it may prove to be just as indispensable, if not more so. Because while speculation comes and goes, trade is eternal. Goods will always move. Commerce will always flow. And if XDC succeeds, it will be the invisible backbone carrying it into the digital age. The future of XDC is not about hype. It is about necessity. And as the world embraces tokenization, necessity has a way of becoming destiny. The hidden engine. The story of XDC isn't about hype, headlines, or speculation. It's about solving a problem so vast, so essential, that the world can't function without it. Trade. While XRP may settle the banks, and Stellar may serve the people, XDC powers the machinery that moves goods, money, and opportunity across the globe. It is the blockchain of invoices, of shipping lanes, of customs clearances, and letters of credit. It is the hidden engine of the global economy. And like any true engine, most people will never see it. They'll only feel the results. Cheaper goods, faster payments, smoother trade. Quietly and visibly, XDC could become one of the most important blockchains of them all. As tokenization takes hold, and trillions in real-world assets move on-chain, XDC may prove to be not just useful, but indispensable. The world cannot run without trade. And soon, trade may not run without XDC. Here at LTL Productions, we uncover the stories others ignore. The hidden engines, the overlooked networks, the coins shaping the financial revolution. If you found value in this deep dive, don't stop here. Hit subscribe, join our community, and share this video with someone who still thinks crypto is only about price charts. Because the truth is bigger, the future is broader, and the story of XDC is only just beginning. Subscribe to LTL Productions. Don't just watch the shift, be part of it.